Hey guys, today I'm gonna talk about Opera browser stock. I think now is a good time to talk about it due to the recent dip in price due to a pre-IPO sell-off. And I bought some shares, so that also makes me want to make a video about it. So Opera has a lot of different products. Their main product is the browser, of which you got Opera Browser 1, which is really popular. You got Opera Mini, which is a browser that is made specifically for the phone, because like it needs less processing power to use, and uh, you also see that it will synergize with other features. You got Opera GX. It's also an Opera browser, but it's mainly marketed towards gamers, and it's really popular in the gaming space. It's one of Opera browser's biggest products. You got Opera News. It's Opera, basically just a news platform. It is one of their more profitable businesses. Like most of their revenue is search, but news is also a big part. You also got Opera VPN. This is more like an extension to the browser, but basically when you use Opera browser, you can turn on the VPN for free, which is another reason why a lot of people like the browser because of the free VPN. You got Lumi. Uh, Lumi is more of a side quest right now. It's not even included in the earnings as far as I've seen. It's kind of like Netflix or Disney Plus, but right now the beta only works in Poland. So right now it's nothing yet, but maybe in the future it will be big. I'm not sure how it's gonna go because their pricing isn't really clear yet, and when they will expand to which countries isn't really clear yet. You got Hype. It's kind of like a WhatsApp rip-off kind of deal, but uh, it's it's kind of fun because you can use it in your browser. Like at yeah, it's integrated into your browser, kind of like WhatsApp web is. So it's nice. You also got cashback. This is also like an extension. Basically, when you go shopping, there's a cashback feature which gives back cash. Yeah, it's kind of self-explanatory, I guess. But so one of Opera's big expenses is marketing, and the way they do marketing is mostly TikTok, where especially the Opera GX official account has a lot of followers. They also have like an Instagram account. It's quite active, but probably the biggest expense, I'm not sure because they don't state which is the biggest expense, but probably the biggest expense is that in certain countries, mostly in Africa and the Middle East, they provide you free data when you're using Opera Mini. Because basically, in those countries, the purchasing power relative to the price and data is like pretty bad. So free data is like a huge deal for those people. So that draws in a lot of users in Africa and the Middle East. But they have been marketing more towards North America and Europe recently, because the average revenue per user is a lot higher in those regions. So now we look at revenue growth. Opera has been seeing good revenue growth, mainly in search and advertising, but also in news. Uh, their revenue CAGR over the past 5 years has been 16.08%, which is quite high. And then you might think, why is there like a huge spike in the middle? This is mostly due to COVID. During COVID, all the search platforms had like a big jump in revenue, but afterwards that cooled down again. But right now it's on a solid growth track, and I expect it to just keep growing. Also, shout out to Joseph Carlson. I used Qualtrim to get this chart, so thank you. So the reason why I think the revenue will continue to grow is because the Opera users have really high customer satisfaction, and also the revenue will probably grow because now that it's marketing more towards North America and Europe, the average The ARPU, the average revenue per user, is going up a lot. So that right now is a big reason why their earnings are growing. So now the management of the company, this is where it gets a bit more complicated, but Opera is owned 54% by Kunlun Technology, and Kunlun Technology is a Chinese multinational business that focuses mainly on software and fintech. The CEO of Kunlun is James Yahoo Zhou, which is also the CEO of Opera Browser. He owns 30% of Kunlun Technology, and he owns 7.8% of Opera Browser. Then you have Lin Song. He is the co-CEO. He appears to be in charge of day-to-day operations. His career seems to mostly consist out of working for Opera as both a developer and a manager. So some people may see it as a risk, it being part of Kunlun Technology, because if they sell off, that could cause a big drop in price of Opera. But I think that risk is actually rather small, because Kunlun Technology seems really really focused on getting like a fully integrated web experience. And I think the Opera browser is a very important part to that, so I don't think it's likely they'll sell off anytime soon. Also, the CEO of Opera just seems to love Opera, so it's also unlikely that he will sell anytime soon. He's been adding shares pretty much ever since he became the CEO, so that's pretty cool. Then for the balance sheet, they have 98 million in cash and they have 5 million in debt. It's quite a bit of cash they have. They don't have any debt, which is a very good thing, because now with raising interest rates, it would be like not so pleasant to own a company that mostly grows out of debt. So strong cash position. I like it. Then the ratios. This is what makes internet browsers really attractive. Like you see this in Google Chrome, they have great margins, great return on capital employed, which is why Apple also wanted the browser with Safari. It's why Microsoft wanted the browser with Edge. Even in the Google trial, the Microsoft CEO testified that the browsing business is probably the best business model to own. So as for the margins for Opera, their gross margin is 83%, which is really high, but that's because internet browsers are such an amazing business. Their operating margin is 20%, and their profit margin is 4.5%. Their profit margin being lower is mostly due to they invest back a lot of their capital into growth right now. So in total, their return on capital employed is 7.41%, which is quite high, but I think it definitely could go higher with the rising ARPU and the continued growth. So when they invest less in growth, the return on capital employed will probably also grow. So yeah. So as for the free cash flow, their free cash flow yield is 7.53%, which is quite high. But you also gotta take into consideration stock-based compensation, because usually stock-based compensation it like replaces salary, so the expenses go down, which basically inflates the free cash flow number. But the stock-based compensation is about one eighth of free cash flow, so like 12% basically. It's really not that much, because in the end it's 3.74 74 million per quarter. So it's, in my opinion, it's completely fine. But yeah. So as for shareholder returns, in 2022 they did very aggressive buybacks. So the shares outstanding went from 114 million to 90 million. Right now the share buybacks have basically slowed down, but this is largely attributed because they now pay a big dividend. They paid a one-time dividend of 80 cents per share, which is a payout ratio of about 67%. Now they do semi-annually a dividend of 40 cent, which is once again a dividend yield of 7.35%, which is really big, but it also comes at a big payout ratio. So maybe in the future that goes down. I don't think it's likely that it goes down if the company keeps growing, but of course, if the company starts performing badly, that will be one of the first things to go. So if you're looking for a safe long-term dividend investment, this is probably not the safest, but if it works out, it could be a lot higher return. So it's nice, I think. I think the reason it went with a dividend instead of continuing the buybacks is because due to the buybacks, the valuation had risen a lot, also due to the good earnings. So it's probably just more shareholder returns to do it as a dividend than continue to do buybacks. So if you want to buy Opera stock, you might wonder what's like a good price to buy. Right now it's trading at an 18 PE, which it might seem a little low, which I think it is, but at the same time you got like a bit of risk of exposure to China. You got like a bit of risk with a lot of shares being owned by Kunlun, but I personally don't think that risk is like that big. You also have like its competitors like Google, Microsoft Edge. It's like it's hard to compare PE because those are like mega cap companies. They're like great cash flow producers, so they trade at a premium. So sure, you can say Opera trades at lower PE than those companies, but that is because those companies don't really have much risk and they have been having great returns. The price to book ratio is 0.65. That's mostly because it's an internet browser company. It doesn't have much book value, so it doesn't really matter. So personally, my stake, I bought 81.91 shares when the pre-IPO guy sold his share. So the price dropped a lot, so I scooped up some shares. It's still trading at the price I bought it at, a bit lower even. So and in the picture you see my full portfolio if anyone was wondering. Although I do have Microsoft shares in another trading account, but on my trading 212 account this is all my holdings. Trading 212 is like 80% of my money, if you guys were wondering. I don't have that much money. I'm a student and I work part-time, so yeah. Hope you guys enjoyed the video. Leave a like or a comment maybe if you're looking at any of my holdings and you think I want a video about it, then I will definitely consider it. Yeah, so have a good day.